Ladies and gentlemen, good day and welcome to the Privi Speciality Chemicals Limited 4Q FY22 conference call hosted by Asian Market Securities Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Kapadia from Asian Market Securities Private Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone. On behalf of Asian Market Securities, I would like to welcome you all for 4Q FY22 earnings conference call of Privi Speciality Chemicals Limited. From the management, we have with us Mr. Narayan Iyer, Chief Finance Officer of the company. We shall start the call with the opening remark from the management and then we will have a Q&A session. I now hand over the call to Mr. Iyer for his opening remark. Over to you, sir.
Good evening. This is Narayan Iyer, the finance head from Privi Group, and a warm welcome to all our investors and all participants on this call. To give a brief with regard to the performance of Privi on the year that's gone by, that is the year 21-22, we've been able to have a consolidated sales of about 1,402 crores. Prima facie, everything comes from the aroma chemical space, and the volume that we achieved in this year was about 29,432 metric tons. This in comparison to the earlier year where we were able to do sales of about 1,276 crores. The volume was about 29,337 metric tons. So volume wise we have hardly grown about 0.32% as compared to last year, and value wise by about 9.81%. Just as a reminder to most investors, though everyone is aware, we lost almost about a month's sale due to the flood at Mahad, where our factory and our operations were closed for more than 3.5 weeks. So that's a segment wherein we lost some of the volumes. And second, because of the ongoing pandemic and the government of India and especially Maharashtra government and to some extent Gujarat government had also banned the use of oxygen supplies to industries, due to which most of my capex there has been a delay in completion, and hence in the financial results that have been uploaded yesterday, both in the stock exchanges as well as on my website, you will see that there is a huge amount of CWIP, that is capital work in progress, still lying around, because our date of completion for our two main large projects, which consists of camphor at Unit 2 in Mahad and the Galaxamus project at Unit 6 in Jagadia, Gujarat, are still to be completed. We expect both the projects to be completed positively by this quarter, and some revenue or some sales to start from July 22 onwards. Broadly, the turnover and sales has been more or less with what we thought about that we will be able to achieve, except that we faltered on completion of the projects. And profit-wise also we would have been much better off than what is appearing today to you of about 131.36 crores prior to the exceptional item and 136.65 crores of post the exceptional item. And exceptional item is nothing but the insurance money that we were able to get in this quarter from the insurance settlement. But to the fact that there were two main increase in our input costs, which actually to some extent derailed our profitability statement. One, the freight expenses, which as most of you are aware, are continuing to be on the rise, and there has been no control. Availability of vessels and containers and ISO tanks has been a big challenge for us, and I think it is most so for most of the exporters as well as importers. If I had to do a like-to-like comparison between what the expenditure or what the cost was in 2021 and what it was in 21-22, the company has almost lost on account of the higher prices of the freight expenses, both for exports as well as imports. An amount of 50 crores was spent higher, and due to the coal expenses going up, we almost ended up paying close to about 20-22 crores higher on the coal front. So had this been on more like an apple-to-apple comparison between last year and this year, our profitability could have been possibly better. And so this is on the P&L that I would like to give an opening comment or an opening remark. Second, remark on the balance sheet before I hand it over to you all. Don't get perturbed by the inventory level, which is high. There are two counts on which inventory has gone up. One, the delay in completion of the three projects, PRIVISCL, Camphor, and Galaxy, which as per schedule was something to happen between October to January, which is still not yet happened with regard to Camphor and Galaxy, and PRIVISCL has just started. Being imported items, there is a lead time, so some of the inventory has got piled up on account of these two products also. Second, because of the continued freight problems, there is a long gestation time of the vessels coming in and vessels going out. Sometimes most of the vessels are offloaded in transshipment basis and everything. And hence you will see in my financials a GIT number, goods in transit, both on account of the raw material imports, which we import worldwide, and as well as the GIT on account of the finished goods or the sales. These numbers have also gone up, thereby pushing up our inventory level in this year on March 22 to as high as 562 crores or so. So, however, we are confident that with the starting of the two projects, Camphor and Galaxy, where some of the inventory have got piled up, we will be in a better position to utilize this, and by December and more so by March 23, you will see that previous inventory will be back to where it used to be on the factory front of about 2.5 months, and on GIT, because now GIT is something that I'll have to live with, especially when we are complying with Ind AS norms. So that may continue to be in the range of about 30 odd days or so. So inventory level will remain at about 105 to 110 days. And due to this, higher inventory, and also that the working capital cycle getting a little bit strained because of the circulation of money within the system globally, as most of the global economies are finding a little bit of a recessionary trend and inflationary trend. In fact, basically, we find that money is hard to come about, and due to which by borrowings on the working capital front has also gone up in comparison to the previous year, because it's all lying within the system, within the inventory, within the payables, within the receivables, etc. As far as the term loans is concerned, term loans was something which was approved and which was indicated to all the investors as well as to the board and to the shareholders, because it was mainly on account of completion of the three ambitious projects that Privi had embarked, and so those money have been utilized for such capex. In fact. Don't worry, and there is a good potential in Privi as we go into 22-23 with these projects to be completed. Yes, we are a little cautiously optimistic in this year, mainly because of the continuing pandemic situation, the war still not giving any sort of a trend of being completed or near completion, because we still really don't know which way the war situation is going to pan about. And many of the economies like US, Japan, they're all already into high inflation. Argentina as an economy is really come down, and we do have some concerns on the Latin American markets also apart from Argentina. So keeping all that into the account, Privi as a company are cautiously optimistic in this year. The reason of being cautiously optimistic is we are optimistic because till the time mankind would like to continue to have a bath and like to smell good and keep washing clothes. As you all are aware, 90% of my products that we manufacture are used in this segment, in fact. So that's why we always feel that our products, the main products on the pine space and some on the phenol space, is to some extent recessionary proof. Yeah, the specialty chemicals is something which thrives when there is always a feel-good factor around the global economy, and we expect this trend to reverse maybe in about 3 to 6 months' time. So on that opening remark, I hand it over to the investors and to Saurabh from AMSEC to take the meeting ahead.
Thank you very much, sir.
Yeah.
Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Manish Gupta from Solidarity. Kindly proceed.
Thank you for the opportunity, sir. I had 3 questions. My first question is that, you talked about the pressure on raw material prices and, freight and coal. I'd like to understand, sir, what are the dynamics of your business? That the steep increase you have seen in input prices and logistics costs, over time, can you pass these on to customers to protect your margin, or is this something that you will have to bear? That's my first question.
Okay. You want to reply to your first question?
Or I can give you all 3, sir, whatever works for you.
Fine. So as far as the freight is concerned and the steep prices that's going around, in fact, when the freight prices on the inputs is concerned, in fact, that means when I'm importing raw material, and my basic inputs are the pine-based raw material, and all this pine-based raw material we buy at ex-works basis, which means the entire freight and freight logistics is borne by Privi and not by the supplier. So this keeps changing on consignment to consignment basis of late, because no one is ready to enter into long-term contracts on the freight expenses. As far as the exports is concerned, or my sales is concerned, once again, where we used to have long-term contracts of 6 months or 1 year with most of the freight forwarders and the logistic company, we find that the last 1 year, starting from January 21 onwards, most of these companies have, not agreeing to a long-term contract or to a fixed price, because they themselves are not aware as to what could be the logistic cost or what could be the expenses that a company who is owning the vessels are going to charge to them. However, when we entered into annual contracts for our global customers, last year as well as in the current year, we find that our prices are fixed even for the freight. Previous year, none of the customers were ready to give us the increase in the freight expenses, though we went back and we had suggested about this, logistic expenses being very, very high. This year, when we entered into contracts in the month of October, November, December, based on whatever was the freight then available in the market, the rates on which we added about 5 to 7%, thinking that this could be the top, and beyond that it will not happen. We find that after the month of November and December, and more so starting from February and March, with the war coming in and subsequently China and Shanghai and all this being under lockdown, the freight expenses still continue to be on the rise. And in such a situation, it is very, very difficult for us to get back to the customers, especially those customers where we have, having an annual contracts or a 6-monthly contracts, that these customers will not come back to us and, allow us that extra freight expenditure. So it will be difficult for us, though we will try our best whenever the, half-yearly contracts or the annual contracts get renewed or is in the position of renewal, we do get freight expenses a little bit from the customers, in fact.
Okay. So my second question is,
yeah.
Sorry, you were saying so?
No, nothing. I hope I've been able to clarify on the freight, and that's what I wanted to ask you.
Yes. So, what I take away, paraphrasing what you're saying, my understanding is you're saying that a portion of the inflation in freight you can perhaps recover with a time lag. That's what I hear you say.
Absolutely.
Okay, fine. My next question, sir, is that, we've been doing a lot of work in biotech and we have a pilot plant and all that. Based on what you know at present, and of course, these things are still evolving, by when do you think, sir, that we can commercialize our first biotech product?
Well, with the way in which it is progressing, and as you know, biotechnology is something that, you can see a success today, or you can see success maybe 3 to 5 years, or no success also. But having seen the trend at the research and at the minuscule pilot and now in the main pilot, we expect these things to give us a positive output, and we should be ready to start commercializing thereafter, after getting the results and the yields, somewhere from 24-25 onwards.
So, are you saying, sir, that we should see first revenue of this in fiscal year 24-25?
The first revenue may come about in 25-26. I'm saying that we will have to commercialize this in 24-25. Now we are at the pilot scale. So once the pilot at 1,000 kilo level gets succeeded, or at 100 kilo level of output gets succeeded, that's when we then try to commercialize such biotechnology products, for which we may require some capex amount. And post receiving the capex amount, it takes about a year to 15 months to set up any capex in the aroma chemical space, whether it is a synthetic aroma chemical or a natural biotechnology aroma chemical. And that's the reason that I said that, we could probably see commercialization happening in 24-25 and the first bit of revenue coming from 25-26.
Great, sir. And my last question, sir, is that, in the last call, I think you published a very nice presentation about all the products that you were working on and how those would give you your revenue over the next couple of years. And I think you mentioned that the target was roughly 3,000 crores in 3 years and then 5,000 crores after that. So what I wanted to understand, sir, that, do we have development right now which will get us from 3,000 to 5,000? Or, these are products that you will identify? Or are these products already in development, which is why you have the confidence that these products will take you from 3,000 to 5,000, new products?
Okay. We do have about 3 or 4 such products which is in the pipeline, which will help us and entail us to take from 3 to 5. And some of the other products are being developed. A few products we are looking from the biotechnology space also that could add to the bandwagon, in fact. And at the research level, currently our company is working almost in 8 different products. So if the research succeeds on these 8 products, all in the main space and main segment of the aroma chemicals, we then take it up to the pilot level. And post-pilot is something that we will, be going in for the commercial plan. So seeing our trend of the past and how we've been, increasing our basket of products, as you know, Privi from about a couple of products way back, long back ago, about 25 years ago. Today we are almost at 74 different products of aroma chemicals that we are selling. We do expect and keeping that same trend, getting about three, four new products in most of the years. It can all click in 1 year, or it clicks in about equal tandem. But confidence is definitely there that the R&D team really strives well to ensure that we get newer products, and as well as ensure that the yield and process improvement on the existing products also happen about, which helps us safeguarding our margins, as it has done in this quarter as well as the quarter earlier. Because if you'd see that most of the raw material prices, there has been a spike. However, Privi's margin on the RM to the sales, we continue to be at the same level of about 59.6 to 60%. You would not see any change. Though the input costs have gone up, it's only on account of the yield and the R&D inputs which helped us safeguard our margins in this year. So to keep it easy, yes, we have products on the pipeline, and we expect these products definitely to help Privi, move from the 3,000, what we expect to do in about next 3 years, to keep a vision and make us, move steadfast towards the 5,000 crore mark.
Okay. Sir, I had a few other questions, but I'll come back in the queue to give my colleagues a
Sure, Manish. Thank you very much. Yeah.
Thank you. Participants who wish to ask a question, kindly press star 1. Please give us a moment. The next question is from the line of Pratik Singhania from Sage One Investment. Kindly proceed.
Hi, sir. Thank you for allowing me to ask questions. So my first question is with respect to the growth for this current quarter. So we grew by around 7% YOY, and this was a function of a realization growth. So is it right to conclude that there was no volume growth in this quarter?
That's correct. That's correct. This quarter we done a volume of about 7,600 metric tons.
Okay. And sir, like for FY23, what kind of a volume growth would you guide in terms of the overall business, given the new capacities are coming up?
Broadly, we expect, on the volume front, to go up by about close to 15% to 18% growth on the volume, which means I'm talking that from the 29,432 tons that we have achieved, we may inch towards the 35,000 ton mark.
Okay. And sir, given the spike in raw material prices, so like April and Q1, so basically when we were speaking, say after the Russian-Ukraine war, that what is the status, so it was sounding as if Q1 would be much painful as compared to Q4. So do we expect this gross margin to have a dent in Q1 given the current trend in April?
Q1, there may not be so much of a dent. Reason being, most of the pine-based material that we procure has a very long gestation time of sailing. So it takes about 3 months to 4.5 months by the time it is dispatched and it is actually coming to the factory. And then from the factory, it gets consumed in the production process. So you may see a partially getting dent in this quarter. Because the higher prices of CST, which comes about, from the dispatches that start happening from 1st of January, most of the raw materials prices have gone up. All that will start getting affected into my financials more so from May end onwards. There could be partially a dent, but most of the dent may start rolling from the second quarter. And we hope that in the spot market and the second quarter price revision, we will be in a better position to offset the increase in the raw material prices, in fact.
Okay. And so whatever contracts are coming for renegotiation as of now, all those contracts, are you trying to do a contract, or you are trying to sell now more of on a spot market basis, so that most of this freight cost and everything gets settled in that sense?
Pratik, no. We normally, continue to be in that 65 to 70% of contractual sales, and balance 30-35% is something which is well in the spot market, because we don't want contingencies to be kept on our volumes also, because if in the spot there is no demand, we'll be out of business. So we continue with our 65-35 pattern of contract to spot, in fact.
Yes, sir, because see, logistics and freight cost and all this input cost, many other companies have also faced similar issues. But many of them, because of their contract is in such a manner, or the price hikes is in such a manner, that they've been able to protect their margins. See, given we are into such a niche chemistry, wherein we make N-6, N-8, and in some chemicals up to N-10, N-14 as well, right? So given that, we expect the company to at least if not maintain, at least to have a lesser dent onto the EBITDA margin. So all these factors like freight cost, obviously input freight is not in your control, but whatever is a freight towards the output, at least over there, like you can have some kind of a formula or a pricing which is fair to the client as well as our company.
Pratik, noted the concerns. We'll see how best we could, manage the customers and the customers' contracts, keeping your inputs what you are giving in fact.
Sure, sir. Thank you so much for allowing me.
Yeah.
Thank you. As a reminder to participants, kindly press *1 to ask a question. We have the next question from the line of Deepan Shankar from Trustline PMS. Kindly proceed.
Good evening, sir, and thanks a lot for the opportunity. So,
yes.
Firstly, wanted to understand, so during the last call, we have discussed about price increase to be taken up during Q4. So, what is the quantum of price increase, and has that been fully incorporated during Q4, or some effect to be visible in Q1 also?
Okay. No, all by multinational companies where we enter into contract, that's on the calendar year basis, and all such contracts which are started from 1st of January 2022, the sale prices that we are doing on the contractual quantities and volumes are with higher prices, and these higher prices range between 5 to 8% depending on the segment and the product that each of these customers have, looking at, and it also differs from customer to customer, and it depends on the volume of offtake from each of the customers. That's why if you see, if you do an analysis, and I've done some analysis because a few investors had also sent me some mails asking for the analytical thing. There has been prima facie an increase in the price to the extent of 6% on the sales that we have done in this quarter, as compared to what average price that we were doing for the first 9 months or so. So it means that the increase in the sale price has also helped us, to augment some of the higher costs of the inputs, where we were able to offtake it and giving better prices, in fact, from the customers.
Okay. And secondly, so are we seeing more disruptions in terms of CST supply, and is the prices now being stable, or it is still on the rising mode?
So CST prices mostly, are all contracted, and there is a back-to-back contract in the sense, because these CST suppliers, basically the CST for them is a byproduct. It is not their main product. And for them, it is a hazardous chemical where they do not want it to be stored too long within the paper mills where this is actually coming out of the paper pulp crushing process, in fact, So their main concern is to ensure that it comes out of the process and it goes out of their factory at the earliest. Prices for all the CST that we have entered into contracts, they are more or less firm. It doesn't change every month or every 2 months, but it is definitely in place for the 6 months or 1 year. The prices remain fixed. But yeah, as we keep going in for newer contracts, because CST contracts are not fixed that it will only be happening on 1st of January or 1st of April or 1st of July. It happens depending on the tender floated by most of these paper mills to various CST consumers across the globe. So this can start any time. It can start in May, it can start in July. So we keep bidding for these contracts, and at the time of bidding the contract is when we know what the current CST prices looks like in the market, and accordingly we bid basically based on the market conditions then, in fact. As far as CST disruption is concerned, now the Caspian Sea or the sea on the Scandinavian countries is open for movement of the goods apart from the essential goods, which I was happened to say in one of the to a few investors when I had some investor meet. So now it is open. We feel that the so-called CST flowing from the Scandinavian countries to India, that situation could improve. Having said that, all this is anyway appearing in my goods in transit. So we as in Privi have not been really affected because of the war, as we have a good amount of inventory of the CST, both from the Scandinavian countries as well as from US and Canada.
Okay. So lastly, sir, so this increase expected in the CST prices, so mostly we will see the impact from Q2 to Q3 or Q3 itself?
That's correct. Q2 and Q3, yeah.
Okay, sure, sir. Thanks a lot and all the best.
Welcome, sir.
Thank you. The next question is from the line of Zubairi from Mondrian Investment Partners. Kindly proceed.
Thank you. Am I audible?
Yes, sir. Not very clear. Could you just speak some few words?
Yeah. Can you hear me?
Yes, kindly proceed.
Better.
Thank you. Thank you, Mr. Narayan. A couple of questions from my side, please. Just similar lines with the other participants on the cost pass-through. So it seems like, for example, the contract price.
Zubair, 1 minute. I think your voice is echoing, so your words are getting a little
yes, they're
overlapped.
Muffled, actually.
So it's not very. It is very, very muffled. So I'm not able to understand your question at all, Zubair.
Okay, let me try again. Am I better now?
Much better. Maybe you will have to possibly speak a little bit more slowly so that your words doesn't get muffled, I believe so, in fact.
Yeah, sure. So a couple of questions from my side on the cost pass-through.
Yeah.
I understand that the contract renewed at the start of the year, but as you said, the inventory, essentially CST, can be bought during the year. And obviously, during the year, we can see the freight and the energy expenses going up as well. So during the year, there is no potential to increase prices. You have to wait for 9 to 12 months, or at least 9 months, before there is a cost pass-through to your customers. Would that be the correct implication?
Zubair, no. I have not been able to understand your question, Zubair. Honestly, I've not been able to understand your question.
Zubair, sir, are you using your handset?
Yes, I am using my handset.
Not through a speakerphone, right?
Yeah, not through a speakerphone, no.
Because your voice still continues to be muffled. Zubair, if you don't mind, could you possibly send me an email so that I may be in a position to answer you?
I'll also send you an email.
Yeah?
Yeah, that's fine. No worries. Thank you.
Okay. Yeah, thanks, Zubair.
Thank you. We request participants to kindly restrict your questions to 2 per participant. The next question is from the line of Chintan Patel from Sadco Capital Markets Limited. Kindly proceed.
Yes, sir. Thank you for the opportunity. Sir, our top line declined by 4.5% on a sequential basis. What is the reason behind of the subdued top line numbers?
It's a decline you're saying over last year.
Oh, on a sequential basis, on a quarter-over-quarter basis in a Q4 FY22.
Okay, because that's you're talking about Q3 and Q4. Is that what you're trying to tell me?
Yes.
That's basically because, post the war getting declared, most of the Europeans have really not been, taking in the volumes, and spot market also, it became a little bit, wait and watch sort of a situation. And as you're aware that Latin American economy is really, getting worse day in, day out. So it was also a conscious decision on our part, not to supply too much of materials to the Latin American markets, especially Argentina as an economy, as all of you are aware, is completely bankrupt and is really on the verge of a huge inflation. So, we found that even the Europeans who normally take in extra volumes during this period, there has been a dip as far as basically on account of after the war coming in. We find that their offtake in the month of March has been much lower. So these are some of the reasons for the last quarter sales coming down. And one more reason is that the company has migrated from an Oracle system to an SAP system. So in the month of March, the last 5-6 days, we actually closed the system a little earlier for smooth migration from Oracle to an SAP. So that could also possibly have led to the reduction in the overall sales from Q3 to the Q4.
Okay. And the second question on the finance cost. Our finance cost shot up from 186 crore in Q4 FY21 to 8.3 crore in Q4 FY22. So how it will move going forward? How it will look like going forward?
The finance cost going forward will look into this sort of an average only. Reason because our utilization on the working capital front has jumped up from about 200 odd crores as on March 21 to close to about 450 crores, which is what we had also envisaged and captured on a steady state of going concern basis business, in fact. And secondly, a part of the term loan which has got capitalized or which is getting capitalized, that will also come into the interest cost expenditure. Once the two main products, Galaxo Musk and Camphor, the capex amount which is lying in the CWIP, that gets capitalized in this quarter. So the entire term loan interest will also start coming and hitting it into my P&L. So you could possibly see overall finance cost starting from 22-23 as a year in the range of around 55 odd crores or so.
In the next year, sir?
Which next year?
Should it come at 24 going forward, like next couple of years?
Well, it's too early for me to say anything, but maybe I'll have a better answer or be better prepared in about 3 to 6 months' time once our existing projects also start sweating in fact. Yeah, if everything goes the way that we are thinking about, you would see interest and finance costs coming down from 23-24 onwards, in fact.
Okay. On the sir, the last question is on the regulatory front. Notice from pollution board. So can you give some show-cause notice on a pollution from the pollution board, Maharashtra Pollution Board?
That is a normal routine matter which is happening. I don't know how these media people made it into a big issue, honestly speaking, in fact. So we have already addressed it and we have responded to the said notice that we have received in fact. So it's absolutely a day-to-day routine affair, in fact. So
Okay.
it's not as serious as made by the media channels, in fact.
Okay. Thank you, sir.
Welcome.
Thank you. We have the next question from the line of Riju Dalvi, an individual investor. Kindly proceed.
Yeah. Thanks for the opportunity, sir. Just two bookkeeping questions. First one is that, like, if you can share the breakup of volume data for Q4 as well as the entire FY22 year.
Breakup in what terms you want to know, sir?
Volume. Sales volume.
So volume for the year, for 1,402 crores of sales that we have done, that volume is 29,432 metric tons. And for Q4 prima facie, it is 7,599 metric tons, culminating to a sale of about 374 crores, what you see in that.
Sir, my question was like, can you please break it up by segment, that is in finance, citral, specialty and all?
We can possibly do that also, and it will come in our annual report. We normally give that in a space and segment, so it should come in very soon. The annual report should also come. But broadly, if my memory serves me right, the pine will of the said 29,432, pine should be somewhere close to 22,000 tons. So that's my main forte, and phenol could be about 4,500 tons. So these two is broad numbers that I can talk about. Should be this is the main strength of Privi that we have. Finer details, maybe if there is a mail sent by you, then I could give you the exact numbers on that.
Got it, sir. Got it. Thank you. And sir, the other question was that, like, could you please confirm that, like, we are talking about 3,000 crores kind of top line by FY25. Given this scenario, like, what kind of situation, then supply chain issues, then we have some project that got delayed. So are we still aiming to achieve 3,000 crores kind of top line by 2025?
We continue to do so. As I said, we are cautiously optimistic, and the vision of 3,000 crores continues to be so. In fact, so we will be working on that path, and our zeal, our passion is to ensure that Privi reaches 3,000 crore at the earliest. 24-25 is what our dream is, what our chairman, Mr. Mahesh Babani, had also mentioned in the AGM address. If the situation is really going to be bad, if not 24-25, maybe 25-26. But achieving 3,000 is something which will happen for sure, in fact.
Great, sir. And so one more thing, like, you had shared earlier that Q4 FY22 volume data. And can you please share the Q4 FY21 volume data?
I do not have offhand, sorry, sir. In fact, I'll have to get back into some of my investor presentation, but should be more or less the same, it or maybe a little bit lower than what we have done now.
Right?
More or less consistent only, in fact, because even if you see in the quarterly results that's been published, in fact, so we did a sale of about 3,465 crores or something of that sort in the quarter run March 21. So if that is so, and with the prices being a little lower at that time as compared to this quarter, it should be more or less same. More or less same, I'll say that. It will not be a big sea change.
Got it. And so one more thing, just wanted to confirm with you, like, earlier in other call, you had said that due to the Russia and Ukraine conflict, we might have issue of raw material supplying or sourcing.
Sorry, Biju, could you clarify once again what you are asking?
Yeah. So earlier you said that due to Russia and Ukraine conflict, our raw material sourcing might get impacted if that situation continues for a month. And this is actually continuing more than a month. So how are this situation that you are facing right now, and what could be the main issue maybe in a quarter later, as you said that 90 days kind of in transit that you have for raw material sourcing?
Okay. Biju, what I had stated about a month or month and a half ago was at that time the entire Baltic Sea region or the Caspian Sea as it is also known as, where the Scandinavian countries have ports, whether it's Stockholm or Helsinki or Norway, Poland and Russia also sharing a part of the, that sea. That time the entire sea and entire ports was shut for other than essential services. Now, what I happened to tell you a few moments ago was that the port operations in these region have started, thereby allowing the CST, which comes from all the Scandinavian countries, namely Finland, Denmark, Sweden, Poland. All these countries are now started, we have been able to get the ships and get the materials from these countries from where we have, contracts on the paper mills and everything of that sort. So that CST has started coming in. The availability of vessels remains to be a challenge, but at the price, we are still able to get those CST into our country. But as you know, that from these countries to reach into India, there is always a gestation period or a gestation time, and that time is something that it evolves to reach Privi or Privi's site at Mahad, and hence we have developed a huge storage capacities wherein we stock this CSC as a raw material front. The only region from where we find now it could be a little problematic from some of the mills in Russia and Ukraine. So we are doing our best to ensure that we try to get more and more contracts from other countries, which includes US and Canada, apart from the 6 other countries in Scandinavia. And we also trying to source GTO from Southeast Asia and Brazil, Chile, Colombia, and all these countries. In fact, so definitely we will we'll have enough of CST stock to ensure that our production volumes with regard to the pine-based materials, we do not falter or we do not have a position of not having inventory or not having CST to manufacture the finished goods.
Got it, sir. Got it. Thank you for the detailed explanation and best of luck for future growth.
Thank you, Biju.
Thank you. The next question is from the line of Chintan Modi from Haitong Securities. Kindly proceed.
Yeah, hi sir. Thank you for the opportunity. Sir, first question is with respect to the sales. Obviously, last year was a little eventful year. But on a normalized basis, is there any seasonality on a quarter-to-quarter basis in sales?
No.
Okay. So when we talk of about, say 15 to 18% volume growth, plus maybe 5 to 6% of price increase, so about 20 to 80% kind of value growth that we might be seeing next year. And near-term pressures continuing. You think that this large part of the growth will be recovered maybe in second half of FY23?
That's correct. Because this large part of this growth in this year is going to come from the 3 new products, where we have set up a capacity of close to 10,000 tons. And this is all going to, start rolling in from July onwards. So I'll say even if we start selling something in the spot in July and August and September, the production starts about. Definitely in the main season, which is, the Diwali season out here and to some extent New Year for the Western countries, definitely there could be some spurt happening around there. And 6 months of window on the new products will also entail me to participate in with some of the customers who have quarterly contractual arrangements. So I'll be in a better position to participate in those quarterly contracts. And more so, the confidence stems from that, we will be in a position to bid for in the month of October, November for the annual contracts of 23. So the large players or the biggies who believe in annual contracts, we will be able to service them in the 4th quarter. So you will definitely see a spurt happening in my revenue on the 4th quarter for the year 22-23.
Okay. Got it. And within export sales, can you just give us a broad breakup of, which are the key regions and what kind of contribution in revenue they do?
About 32% comes from Europe. When I say Europe, it is all the European countries, in fact, leaving aside now UK. UK as such only contributes about a couple of percentage or so. The US and Latin markets, if I have to segregate between North and South, of the 18 or 19% of my revenue coming in, about 12% comes from the North American continent, about 6 to 7% comes from the South American continent, 30% of revenue comes from India, and balance from Southeast Asia and a little bit from the Middle East, in fact.
Okay. So large part of the revenue comes from Europe, basically. And
absolutely.
And we understand that, most of the European companies whose manufacturing bases are in Europe are definitely facing a huge pressure in terms of energy as well as, availability of gas.
Correct.
So you believe that, this demand impact could be much more prolonged for us, going, more than, beyond 2 quarters also? Is it possible? Because I think, this is based on, some of the commentaries that I get from other chemical companies also.
Mm-hmm. Yeah, if there is no, the stalemate continues with regard to the Ukraine and Russian war, it could happen that, these European countries will definitely face a huge shortage of gas, and most of the gas are being supplied by Russia majorly, and to some extent by Ukraine also, to these countries. So yes, it's a difficult position to be in, whether it is a European or a company like us, who caters to the European markets, in fact.
Sure, sir. Just one last question.
Mr. Modi, I'm sorry to interrupt, sir.
No, let him be given a last question, in fact. Chintan, go ahead.
Sure.
Thanks a lot, sir. So, if you look at this quarter's gross margin, we have seen an expansion on a quarter-on-quarter basis. And obviously because of freight cost and energy cost, on the EBITDA side, we are flat at 12.6%. For next year, sir, any guidance that you would like to give for EBITDA margins, percentage-wise?
Okay. Now this is a standard answer that I keep giving to all the investors in all the investor call. I know investors and me as a CFO, we disagree on that. I will once again reiterate that the other income in the books of Privi, close to about 32.5 odd crores or 32 crores, what you see is prima facie on account of the timing differences and the exchange rate differences with regard to the purchases that happens on a particular day and the the date in which we make the payment, as well as same is the case with regard to the sales also, that we follow the customs rate booking, whether it is the for the imports, where, as all of you are aware, that customs rate when we do a purchase is always about a rupee higher than the interbank rate as on that particular date. And when we talk about a sales customs rate is 1 rupee lower as compared to the interbank rate. So due to which what you see here, a culmination of about 25 to 30 crores every year, in fact, is nothing but actual Privi's revenue coming from the working capital operations. So I still maintain that my EBITDA level, normalizing this forex gain, what you all are seeing here, it is actually not forex, it's an operations money which is actually coming to my books. My EBITDA margin in this year is about 15.8 odd% or so. We definitely will go up. May not be immediately in the next 2 quarters or so, but if situation stabilizes going forward, what we have all along been maintaining, that Privi's steady state of EBITDA numbers should be between 17.5 to 19.5%. So this could be the range in which we will be operating going forward also.
Thanks for that, sir. But my question was a little different. Just if you allow me.
Yeah, Chintan.
Sir, the price increases that we have taken is for large part of the business is largely locked for the next 1 year broadly.
That's
And
right.
this quarter we had benefit in terms of low cost inventory also, and that will come back and reverse in next couple of quarters. So we had that hit, and basically, assuming that the freight cost and the energy cost will continue to remain at these levels, at least for say next 2 quarters.
Correct.
You think that despite a sales increase, on EBITDA level, absolute EBITDA level, there could be a growth, or it will remain largely flat compared to FY22?
It could remain a little flattish.
Okay. So then probably
there could be a dip too.
Oh, okay. So then probably the bottom line would be clearly a dip, because we'll have higher depreciation because of commissioning of capex. Interest cost would be higher compared to the current levels because of higher debt also.
That's right.
Okay. Got it, sir. Thanks a lot for this, sir.
Thank you, Chintan.
Thank you. Participants are requested to restrict your questions to 1 per participant. The next question is from the line of Manish Jain from Money Life Advisory Services. Kindly proceed. Hello, Mr. Manish Jain. So your line is unmuted.
Hello, am I audible?
Yes.
Yes, Manish.
Yeah, thank you for the opportunity. So my question is, what is the capex guidance for the next 2 years? And secondly, what is the delay in completion of ongoing capex, and when do you expect the current capex to come on stream?
The current capex we expected to capitalize in this Q1 of 22-23, and we should be able to see some revenue coming from Q2. A better sense of revenue will come from Q3, and a large part of the revenue on these new capex will start coming from Q4. As I've been telling that, we will be in a better position to sell most of the volume when we enter into long-term contracts with our major customers. Plans for fresh capex, currently, we are working out formulating a strategy, because Privi always believes in growth. So there are chances that we may take a pause for about 6 months or 9 months, see how this new capex get panned out, and based on that, we take a call to get into the next capex mode, which is definitely our dream project, Menthol, and which entails a huge amount of capex, and for which Privi's board has approved an enabling resolution that we could prima facie go to the market and raise some equity for the next set of capex expansions, and also to possibly improve its overall balance sheet and reduce the debt from its books, in fact. So we also understand that as a parameter. So we will start working on those lines now that the board has approved and given us an enabling resolution to come out to the market and possibly see what sort of various fundraising measures are available on the equity front, and accordingly we get back to the board and come to the shareholders with a final concrete proposal as to what we want to do and what sort of fundraising we'll be doing.
Okay, thank you, and all the best.
Thanks, Manish.
Thank you. We have the next question from the line of Meet Vora from Axis Capital. Kindly proceed.
Yeah, hi sir. Thanks for the opportunity. So just wanted to clarify on this fundraise that we have just approved. We might be waiting for 6 to 9 months. So, what kind of estimated capex or the fundraise that we are doing, and what is the estimated timeline for this, coming into the market for this capex? Because as we are waiting for 6 to 9 months, so this will be rolling out in FY23, FY24, or how do we plan it out?
Meet, too early for me to give you a concrete answer. Yeah, but knowing the equity markets and how it functions, and the process that is involved, including approvals to be taken from the board, the shareholders, as well as the stock exchanges and the appointment of an investment banker, and all that entire process is as good as running an IPO. You can feel that it could take a period of 6 to 9 months time. And as I said, it is also time for us to see that the 500 odd plus crores of capex that we spend the money on the existing and what we capitalized about a couple of months ago. That capex also starts giving me the return, and it starts giving me profits. So it gives me that much more confidence to come to the market and to raise the money. In fact, because it's always better to raise the money when the company is really doing well and all past capexes are actually sweating in full flow. In fact, So I'll definitely revert back to all the shareholders as and when something comes concretely. But it is now time for me to start doing the homework, meet a lot of people, and get into some sort of a table which gives me a clarity as to what sort of fundraise and what cost and what price, everything gets evolved. In fact.
Sure, sir. Understood.
Sorry to interrupt, Mr. Vora, but due to time constraints, we'll be taking only one question per participant.
Sure.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Kindly proceed.
Good evening, sir. My question is regarding what kind of volumes do you think we can achieve in FY23 in Galaxy Musk, Camphor and Prenol respectively, as well as if you can briefly talk about the demand supply scenario in Camphor.
What we are budgeting in to sell of the said 10,000 tons of all volumes put together. For the first year, we have been very, very, very cautious of just about putting into my budget or the business plan, once again approved by the board yesterday, a number of only about 20% of the volume. That is 2,000 tons is what we are proposing that we could sell, though it could be higher of it, in fact. So this is the additional tonnage that may come from the new products in the year 22-23. As far as the camphor demand is concerned, camphor demand has really increased because of this ongoing pandemic, not just in India, because India used to have use camphor a lot for religious functions and religious purposes, but now the entire world is also using this as an measure to keep COVID at bay or something of that sort. Apart from which, of course, the pharmaceutical applications and industrial applications continues to be so. Camphor is growing, and the market for camphor is growing almost about 8 to 10% in the last couple of years. We expect this growth to be maintained going forward also in the next couple of years, and that's the reason that we have also set about camphor of almost close to 5,000 tons.
So if you can split 2,000 into camphor and Galaxy Musk, that is it from my side.
Almost equal, I will say that,
Okay.
It could be about 1,200 and 800 or so, broadly.
1,200 towards musk or camphor?
1,200 towards musk and 800 towards camphor.
Sure, sir. That is it from my side. Thank you.
Thank you. The next question is from the line of Ashish Ubganlavar from InvestQ Investment Advisors. Kindly proceed.
Yeah, part of my question was answered, but I believe you haven't finalized the equity quantum that you would be liking to go to the market for raising. Is it right?
Correct.
Okay, but ballpark, sir, any idea that you can give? I mean, you know your requirement for the next 1 year probably.
It's not just a requirement of 1 year. Maybe it is a requirement for 3 to 5 years. So, it all, as I said, there are a lot of parameters to be evolved or to be understood before I could say that this is the amount that I'm looking at or something. If I had to.
Okay.
Very difficult to estimate, but it could be less than or equal to 10 to 12% of the equity dilution. That's something that I can talk about.
Understood. Yeah. One more thing. I mean, in the initial remarks I missed on the disruption, probably you said that you lost some part of the production because of some issues. Was it relating to last quarter, Q4, or is it?
No. It was related to the flood. There was a flood in the entire Konkan region, and Mahad, our entire factories so our factories were affected because of the flood water coming in.
I'm aware of that.
That was what I was trying to say.
Sure.
So what numbers you see is more like 11-month number rather than a 12-month volume sale, in fact.
Okay, but this quarter is normalized. I mean, there's nothing to.
More or less, yes, normalized. Yeah.
Sure. Thank you.
Welcome.
Thank you. The next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Can we proceed?
Yes, thank you for taking my question. It was around the debt level, sir. So I understand that, this year, the net debt to EBITDA would be slightly elevated because, our debt has gone up and our EBITDA is reduced. But if you look at, 2023, where do we see our net debt in absolute levels and, net debt to EBITDA settling at?
It could come down because we expect, the revenues from the new products, as I was just trying to talk about, and there's as the revenues improves and we start getting margins from the new products, in addition to the full capacity sale of our existing products, we expect the overall debt, as we also have some repayments of the term loans that we had availed in the past. It should come to a level of almost equal or to the equity, because for the very first time that in previous history also the debt to equity has gone above 1. Are you talking about debt EBITDA or debt equity?
So I was looking at debt to EBITDA.
Debt to EBITDA will come down in the coming year because we expect better EBITDA margins to come about, the revenues to grow almost about 25% on what we have been able to achieve. Broad numbers I can talk about. So when those sales and starts coming into the revenue front and into our financials, the EBITDA improves and debt will remain more or less same, or it could reduce, as I said, because of better churning of the inventory and managing the debtor cycles also. You could see from the high level of 3.82 that it is as on March of 22. It may come to a sub 3 level by March 23.
Got it. And our cost of borrowings I saw was around 4.7% for 2022. If I just take the cash financing cost and I take the average borrowings for 22 and 21, I just want to understand what is the breakup of this? Because it seems quite low. So I just want to understand, are we getting any kind of low cost debt in the mix?
See, we are an export house, so prima facie a huge amount of borrowings are from the foreign currency money, and foreign currency interest rates are lower than what it is on the INR front, in fact, And even as far as the INR front is concerned, we got very good rates from most of the banks, very, very competitive rates, in fact, because banks are happy with the overall way in which we also have been maintaining our relationship with them, have been servicing all their debt obligations on time without any failure. So that's the reason that they don't mind giving us loans at very, very competitive prices, because the ratings also are pretty good, in fact.
Got it. Okay. Thank you for taking my question.
Thanks, Anirudh.
Thank you. Ladies and gentlemen, the management would take one last question. The next question is from the line of Praful from BPS. Kindly proceed.
Yeah, thank you, sir, for taking my question. So my question is around the fixed assets, like the capacity we have currently, and our aspiration target of 3,000 crores in 3 years' time. So the question is that if I look at the current fixed assets, including the work in progress, it's around 1,100 crores odd, and the fixed asset turns typically ranges between 2 and 2.2x. So if I assume the same asset turn, it will take us to around 2,200 or to 2,400 crores.
So my question is like, does that mean that there will be some additional capex to reach that 3,000 crores target in coming years?
Yeah, possibly there will be a little bit of capex on some of the existing products, our main products in the pine space, for us to reach the 3,000 crore mark. However, having said that, what you are looking at 1,100 is more like a WDV basis, a written down value gross block. Whereas when we look at an asset to turnover ratio, we look at a gross block, in fact. And my gross block is somewhere closer to the 1,400 crore mark, in fact.
Okay, got it, sir. Thank you very much.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments.
Yeah, thank you. So just as a parting remark, 21-22 has been a year of, I could say, stabilization and maintaining our volumes in the market in the tough times that we have been. First and foremost, the pandemic continuing, and in India it was a second wave that started about from April onwards. Then we had a flood, and subsequently we had another wave of the Omicron pandemic, from December onwards. But we were able to maintain and sustain that onslaught. And finally, by year end, we had the war, which is still looming over us. And not to forget the problems of China and increase in the raw material front and the coal front, and trade prices remaining to be high. Privi continues its zeal on performance, and we've been able to post a very decent performance in this tough times also. And we hope going forward with the 3 new products that we want to start selling, and the capex almost getting completed and projects being put to use on this year end, Privi will be in a much better strength to perform to the best of the investors' liking. And we will be strong, and we will continue and look at the vision of achieving 3,000 crores very soon in the next 3.5 years, in fact. On that front, thank you very much. Have a great day, and be safe. God bless.
Thank you, sir. Ladies and gentlemen, on behalf of Asian Market Securities Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.